Hi everyone, in this video we're going to be looking at the workbook exercises for Chapter 9. And in Chapter 9, we're going to be working on AP 1B, AP 11B, 12B, and 20B. So 4 different problems, and these problems all basically have to do with the calculation of inventory and doing inventory accounting, etc. And so with that said, let's dive in. Okay, so for problem AP1B, relatively quick problem here. It says on September 1st, 2018, this business fruit wholesalers purchased $3,700 worth of dried fruit inventory and paid $120 for freight charges on account. On September 16th, they sold all the inventory to a grocery store for $5,920 on account. And we're the bookkeeper for fruit wholesalers, and we're going to journalize these transactions using the perpetual inventory system here. So first thing we're going to do, let's just go ahead and put our date up here. So I'm going to center align those like that there. And then go ahead and center align all of those columns. So we'll put dates in here. Well, okay, so on 9/1, September 1st, we purchased this fruit. So we're going to increase our merchandise inventory asset account. And so a debit to increase that. And then it says we bought it. Typically whenever we're talking about accounting for these types of inventory transactions, we're always going to be recording these not cash transactions necessarily like we would with customers. I'm going to put this into our accounting format here, but rather with payables and receivables, etc. Okay, so I just link up to that other account, so our debits and credits are equal, and we can just put our explanation in here and say purchased inventory on account. Okay. I feel like something is spelled wrong, but nope. Okay, all good. Okay, so that was us purchasing the 3,000. Oh, and I should highlight here that so we're purchasing the $3,700 of dried fruit. We also paid the freight charges to get it to us. So remember that when we're booking transactions for inventory, we have to record the costs of all of the costs to get the inventory to us and ready to sell, etc., as the cost of that inventory. And so we're going to add the $3,700 of just the cost of the actual inventory, and then the $120 of the shipping freight charges to get it to us. So the combination of those two gets us the $3,820. And then that's just links up there, so that automatically updates with our Excel formula. And great. All right, let's I'm going to copy this. So I'll just highlight all that, Control C, and then Control V to copy and paste quickly. And we're going to say on 9/16, we sold all of this inventory for $5,920. So that's great. We sold our stuff. And like I said, we have accounts receivable now. So we are owed this money from retail grocers, this grocery store. And it's not going to be accounts payable credit, but rather the merchandise inventory. And you know, easier way here. Let's just go equals this cell. And that will give us that same account. If we want to get rid of this link just because it might cause problems in the future, we can do copy and paste values just to override that. So that's just a little easier way to get that same. We could have done Control C, Control V, and then indent. So lots of different ways just to save time of typing things in. And in this instance, we're going to say we made sales on account. Okay. So that's our receivable. We're going to receive this from the grocery store that we're supplying, retail grocers. So that's great. And the one extra piece that we need to record in with our sales entries, it's kind of a 4-part entry, if you will. And for the first part, we'll say made sales on account, and the second part will say record cost of goods sold. And you could combine these into one entry. Our text kind of separates these out, which is fine as well. And so what we're doing here is this portion. Oh, I'm sorry, I missed. This should be sales revenue. I went through all that work of linking, and that's the wrong account. Sales revenue. So this entry is just to record the revenue piece that we earned. And then this second entry down here, we're going to debit our cost of goods sold, which is an expense account. And now we're going to credit our merchandise inventory down here. So that is better. And the cost of the inventory then is the 3820 that we recorded in. Let me link to this cell so that formula down here just updates automatically. And so what you can see is that we earned $5,920 in revenue, but we didn't, our gross profit is not, we made that sale, but that's not all the money that's going to come to us necessarily as far as profit. We have to account for the fact that we had to pay the $3,820 to buy the inventory in the first place. So our revenue minus our inventory, if we wanted to do that quick calculation, gross profit then becomes revenue minus our cost of goods sold, or $2,100 basically. So just something to keep in mind. We don't need to, that'll be shown on like an income statement, which will look on one of the later problems, actually calculating out gross profit, but just wanted to highlight that as kind of a concept. But as far as journal entry goes, this would be kind of the totality of how you record the individual transactions in. So there's no like gross profit account. It's just the difference between sales and cost of goods sold. Kind of like net income is revenues minus expenses. This is like a subcomponent of that.